Hi everyone, and thanks for checking out my channel. Today I'm going to have a look at something I should have probably done quite a while ago, and just being some sort of a disclaimer for any trading plan I'm posting, any video I'm making, just to make clear what I consider to be valid for technical analysis and what I consider not to be valid, and what I think should not be confront with when we are talking about the plan and what it means in reality. So I'm gonna go through the two things. The first one is what I believe is technical analysis, what it is not, and also running through a trade example. A few weeks ago, I was planning for and I didn't work as planned, just to give some example and illustrate what I'm meaning. So let's get started with what I think, in my opinion, is technical analysis. So the first thing as a definition, I think, is to me probability and helping tool. So it doesn't mean it's a system in itself that you could just take and trade blindly. It will give you probability, basically looking at what is the highest probability in terms of what could happen. Let's say you're trying to, of course, go above 50%, as usually trading is either go up or down, no other options really. So you're trying to just get what's the highest probability, and that's what technical analysis is here for. So it's to help the decision on the either between up or down. Now, of course, something obvious, but it's always taken as a down on technical analysis. It is lagging, and it's a description of the past, nothing else. Could argue that everything is always lagging, regardless what the information is. It's always something from the past. You can never get information from the future, but even from the present, it's already usually in the priced in. So there's no actual tools that you can actually use to go and get ahead of the news or anything like this. So of course technical analysis is not different from this, and it's lagging the action. So definitely the point is that we're not trying to consider technical analysis to actually being able to know what the future will actually be. It is more important, probably, a snapshot of traders' psychology. So when the price is moving up, down, we could see the candles or the levels, how the traders are reacting to it. It's a psychological thing, and especially when you're running with high volatility, end of trends and that kind of thing, we can see emotional trading is very different in terms of price action of what it would be a normal trend following trading type. So very important. It's helping to see what the others are doing, and coming to the last point on this, which is extremely important, is that technical analysis, the charts we are looking, they are available to everybody in the world with an internet connection. That's very key, because if there's something on the chart that we see which is extremely not obvious, or that nobody can actually see it except if you're running 10 indicators and thousands of lines everywhere, it means that nobody else will see it, so nobody will buy it, nobody will short it if it's a short entry. So you need to keep in mind that these charts are seen by everybody, and you want to see what the others are saying and not something you only see on your side. So very important to keep that in mind, in my opinion, and very key to what technical analysis is. Now, also very important, what, in my opinion, technical analysis is not. Similar to what I was saying, it is definitely not a crystal ball. Nothing like this exists in trading. We cannot make any prediction where the price will go. It's just not possible, regardless what's the time frame. It's the daily, monthly, weekly, 5 minutes, 10 minutes, it doesn't matter. We cannot know what's gonna happen next. Everything can always happen. It can jump, it can crash at any time. That's just what trading is, and technical analysis is not actually helping on this. It doesn't actually give you any view on the future. It's just helping you with the decision and trying to trade with the highest probability for the trade to be successful. Also, technical analysis is not a static tool. What I mean by this is that you cannot just set up a plan and execute the plan regardless on what's going on the day you actually trading, on the hour or whatever the time frame is. You need validation. This is absolutely critical. When you have a plan, you need at least one level of check to confirm that your plan may have a chance to work, and don't actually just execute it blindly. We'll look in the example which was very obvious with nat gas, and why that validation was absolutely critical to have. Also, technical analysis is not a one fits for everyone. For example, when I'm doing analysis, it cannot be taken just like this, because I'm having my own psychology, emotion control, experience. We have certainly different capital than what everybody else has. Risk management also really much different. The strategy I'm using very much different. So the analysis I'm making are always focusing on my strategy and the way I'm trading, my psychology and what I can take, what I'm comfortable with in terms of emotion control, drawdown, all these things. Can be completely different from someone. So I could be comfortable with holding a position, and someone else might be extremely uncomfortable because the risk would be too high, or the capital trading would be too big, or whatever the consequence could be if the trade goes wrong. So again, technical analysis must be reviewed and tailored to everybody depending on your profile. Also very important, there's always an opposition between fundamental analysis and technical analysis. In my opinion, it is very hard to make money in trading. It's very hard to get a hedge on the market. You need every tool you can get to actually get that hedge, and you need technical analysis, you need fundamental analysis, you need everything available. Confronting fundamental and technical analysis, in my opinion, is pointless, and you actually, either if you purely trading technical, you're missing fundamental data. If you're purely trading fundamentals, you are very likely to miss on very important data from the technicals you can get, especially for the timing. You can be right with the fundamental analysis and completely wrong with the timing. So very important, if you want to have an edge on the market, you need both to work together and not one against the other. And finally, I think this is something at the moment, especially if you watch videos and you look on the internet, and everybody is actually using technical analysis, they can actually generate massive profits by just drawing a couple of lines on the chart and some levels. That doesn't work that way. Technical analysis is very difficult. You need a lot of experience. Quite often it will go wrong. The technical analysis will get invalidated. And also, more important, you cannot just take one analysis and go on any market and trade it like if it was exactly the same thing. Each market is different. You would see that the price action can mean something on WTI and meaning the complete opposite on gold. You might find some markets are not actually reacting to some indicators the same way they do on others, etc. So you need to learn a lot. Each market, get a lot of experience trying to get a feel when you look at the chart what it means, because you just have seen so much of the price action on one market that you kind of know what might happen next and what is the best strategy to apply. So very important as well. Technical analysis is not easy. Yes, the basics are quite easy to get, learning the different patterns, some trend line, drafting, that kind of thing. It's easy relatively, but it doesn't mean that you can just use it and make a lot of money with this. That doesn't work that way. So coming down now to the example I want to give on natural gas and one trade. I didn't actually take quite a while ago now. It was back on the 29th of June. So the plan I did set was to open short entry on the pullback. Of course, I had my own strategy when I'm trading and making entries, and you could see here trading the trend at that time. So we were sitting ahead of the weekend with a massive move down. We couldn't see any rejection, as you can see on the RSI. Powerful move, full momentum. There was nothing pointing to a reversal. There was not buy signal, in my opinion, which was clearly wrong. But that's my strategy, and I'm just following it. Sometimes it works, and sometimes it doesn't, and I'm fine with this. We could see also from here, moving from the top to the bottom, we had trend line pushing down to the price. The 20 MA that's on the 4-hour charts was pointing down. Everything was basically moving on the downside. So I was looking at short entry, of course not opening short at that point, it was too low, but waiting for some pullback to happen, and that was basically the plan. Now back to what happened on Monday. We got a big open here. Is a gap up on 160, so moving there here. So that was the open Monday. So it reached really quickly the 160 target, and at that point the plan was to open short. Now, should you open short straight because you reached the level? Well, absolutely not. This is the 4 hours, so you would drop to the 1 hour to check the price action, and by doing this, here. Yeah, that first trend line that could have acted as a resistance. Reaching to that trend line, we can see very powerful momentum in there. There's no sign of losing momentum as we approach the trend line, and then it went through straight away here. So again, no signal here to open short. It was not the plan to do this without any proper validation before entering it, so I didn't take the trade. Now at that point, very important, you can always switch your strategy depending on the price action, which means putting your plan completely away and switch to the opposite. In that instance, it means instead of shorting that level, entering long. I didn't do it for some reason, but the main reason is I didn't have a buy signal at the bottom, and I don't like trading breakout. That's just my style. Some other traders are loving it, and they will actually take that kind of trades more than anything else. It's not my kind of trading, and I don't feel comfortable trading that high, mainly because of the volatility, but also because it's harder to put a stop loss, in my opinion. But again, it all depends. It's everybody's different style. So at that point, I let the price run up, until I could actually get back into some sort of a tradable level I would feel comfortable with. So the first signal we have of exhaustion was that divergence here on the 1 hour. So I followed my plan and opened short on this, and I remember I was in profit there when it dropped to 167. I let that trade run and had to close break even somewhere because the price kept reversing and got some higher momentum in the following hours. So it's definitely not successful, especially when you consider the move up that was very big. That would have been a massive opportunity to make money on this, and I clearly missed that on that massive trend here. But yes, that's the game, and sometimes the plan is just not working the way you want, but just need to be flexible, because opening short at that point at 160 and ending at 190, that would have been quite a disaster on that trade. So again, waiting for the signal is absolutely critical, and as I was pointing out a little bit earlier, we cannot make prediction with technical analysis, and clearly this is a perfect example. At that point here, everything was pointing for continuation of the move down. The prediction, if we should make one, was for this to continue and test that level, and definitely that break higher was definitely not in the card, and it would have been extremely difficult to actually predict, but it still happened. So yeah, that's it about that. That's sort of a disclaimer somehow of basically what I'm doing in terms of videos, and you can refer to this just in case you get a bit confused with what it is, just to make sure that you don't trade blindly, and always set your own system that is actually fitting for yourself and you feel comfortable trading, and it will should be all fine given enough time until your hedge is actually playing on the market. So yeah, that's about it. Wish to see you around and watch more my videos. Join my channel if you're not part of it yet, and I speak to you soon for more analysis and plans. Cheers, bye.